Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm John Darcy, Editor-in-Chief, and together we bring you the Morning Call. So Scott, yesterday we saw the market end its two-day mini pullback, but the volume remained very light. We didn't get any momentum after some strength in the morning. Do you expect that low volume tape to continue, or do you think the fact that we allowed the 8-day moving average to play catch-up is going to launch us perhaps for another leg higher?
I think at this point there was some frustration on the floor because once we had the move, you couldn't buy high and sell higher, which is the key for momentum traders. And traders love when you could buy high and sell higher, and just sometimes that market doesn't have the momentum. But as you said, we let the 8-day moving average catch up, the 21-day moving average catch up. We're now on day 6 of this new year. We had a powerful 2 days. So going sideways on low volume, absorbing that move is more constructive than a problem, in my opinion.
Alcoa has generally been considered the kickoff for earnings season, but in reality, Alcoa maybe doesn't have the impact that it used to have on the market. It's a big aluminum producer, but it doesn't account for as much of the S&P as it used to. And the meat of earnings season really starts next week. So do you think, when we get bank earnings going at the beginning of next week and some of the bigger tech names, do you think that's what's really going to stoke volatility in the market?
Well, with the size of the move that we had and where we are, there's almost a lot priced into earnings, and I think analysts are a little worried that we might not have such a robust earnings season. And I kind of agree that the economy is not going on all cylinders right now, but I do think we're making progress. And as far as the indices, we're at some of them are at 5-year highs. The news, I think 2 days ago, was we're at the best level since the financial crisis. So like you said, Alcoa is behind us. It set a positive tone. I think it was a little bit more important than it has been over the course of the last year or so, because people are really worried about demand in China and overseas. So aluminum, and also copper, a lot of the leading indicators, if you want to see demand for those, shows that there is some manufacturing or showing some demand for those economic powerhouses. So I think it was a little bit more important, but like you said, the real importance is going to be coming into next week. It's going to be coming into seeing Friday Wells Fargo, seeing some more of the bank earnings. That's been a really good sector. And then we'll start hearing from the big dog technology firms.
Yeah, a very important thing to consider with earnings is the context that earnings season comes in. Right now, like you said, we're at 5-year highs, and especially the banks are the highest levels they've seen in a while. So it's going to be very important to see how the market takes an inline report or a narrow beat on earnings per share and see how the market treats that.
Right, so you have to really be cognizant of what you're holding, when it's reporting, where it came from. And like you said, if you take a look at the spiders here, if you take a look at the S&P, you'll see that we are near the old highs in September. So if you go to the chart, this was that move that started back, what was that, November 16th, that red dog reversal. From there, really nice move to the downtrend, had some resistance here, came in. Here was that 2 days, New Year's Eve movement. Here's that big gap. We've been talking over the last, I think, 4 or 5 sessions about digesting above this gap would be very healthy, and that's what we did. And now we're going sideways here. So short term for the spiders, so to speak, if we get above 146.61, anyone who's been short this move, I would think they try and cover a little bit. And then right away, you have the September highs here of 148.11. That's not that far away. And there are a lot of guys out there in their thesis saying, oh, we're going to come up, test this high and fail. You know what, let's let the market tell us, because if we do get some decent earnings come in and they don't sell them off, if we close above this high, then we're going to have to start going back to that weekly and monthly chart, and then that 1,500 in the S&P or higher could come into fruition in the first quarter of this year.
Another thing to consider this morning that we were talking about earlier, Scott, is Apple. We've been talking about Apple in the morning call almost with an obligatory reference to it because it's one of the most valuable companies in the world, and it's Apple. And but in a lot of mornings, it hasn't really been compelling to the point that there was an actionable setup. This morning, we have some news in the stock that could potentially give it some momentum. Scott, tell us about that news, and let's take a look at the chart.
It's funny you said in that, which I think some traders are having a disconnect with, but it's Apple. But it's Apple. And there are sometimes in a charts cycle or in a company cycle where you have to forget the name of the company and watch the true action and look at the chart. And since September, when it peaked at 703, it's been nothing but a sell. Yeah, we've caught some nice moves off the moving averages, 2 to 3 day moves, or lately it's been 1.5 day moves. So like you said, it'll be important today to see how does it deal with this potential China mobile deal. Tim Cook's in China. There's headlines out there that they're close to something. Stock's up $3-4. Let's see if it actually can hold a gap. I think that'll be important to see if there's any kind of change in the composure of this stock. And if you go to the chart, you'll see, ever since this high here that came in at 703, ever since we broke this 21-day moving average, it's been below the 21-day moving average for all the way down to just say this low. If you guys remember this low, this was a nice trade. We were in Vegas. It was a trade show. I think we put it on, in the Schwab speech. And anyway, nice move back, was contained by this downtrend, by this descending channel. Then we came back really too quickly, showed actually no commitment to this, attempt to bounce. And then, if you recall, coming into the new year, we caught another little nice trade right around here. So, take a closer look at it. That's wound up being a nice trade. But then what happened? It failed to even hold this gap. It failed to get above this downtrend. So now what? Yesterday it closed on the dead lows. Okay, so it's gapping up today. I would say, as a micro step, 525 is important. If you can get above and stay above 525 for just say an hour, then you have this 32. So I'm saying like step by step here, and then you have this major downtrend. So there's a lot of little steps in the way. So let's see if we can finally get any power. But if they sell this gap up with this news and we start taking out yesterday's low of 515, we're right back in this danger zone, and then you really got to go to your weekly charts, and the weekly charts are pretty hard to look at it if you're an Apple bull and you're not being objective, because if we break below this 501 to 505 and close below it, moving average is 476, then the next real support isn't down until about 440. So you really have to disconnect the name Apple. Don't look at Apple as a name. Look at the price action. And as of now, the price action has been very, very heavy. So let's go into the sector spotlight here.
All right, for the sector spotlight, we're going to take a look at the ags, which is a sector that we've talked about and written about at T3 Live several times before. The ags have a very compelling macro story because you see world population growth growing very quickly, and you see arable land, because of climate change and things like that, decreasing. Arable land is the land that you can farm and plant crops on. So fertilizer companies and phosphate companies have a very bright future because we need to feed all these people with the population growth, and with affluence is also growing. It costs more to get corn to feed animals to eat the meat than it does to just feed a lot of people corn. Yeah. And you have affluence growing across the world. Let's go ahead and take a look at the chart, Scott, to see what some of these ag names are doing.
That was very impressive. You know a lot about the fundamental story. That's what are you?
Right.
Are you the editor?
That's what I'm supposed to be, I guess.
There you go. But now you're on tape and everything's going well. So, but if you look at the chart's confirming your fundamental thesis, because look what happened in the beginning of the year. You had a nice wide range bar on New Year's Day or New Year's Eve, so to speak, gapped up, holding higher. Yesterday, it closed near the highs. We're above this prior consolidation. So this ETF, that's a broad-based measure of the ags, is showing strength. So at particular times, it's always a better trade, like when it crossed this downtrend and held. At this particular point, I think the ags is getting a lot more attention, and we're seeing some leadership stocks go, and we're also seeing some laggard stocks start to perk up a little bit better.
Yeah, you talked about a name that's sort of been off our radar a little bit recently with CF. That's a stock that has been a great vehicle for momentum traders that, it sort of started to lag and be a little bit quieter late last year. But recently, like you saw yesterday, it's really perked up and could start to be another compelling trade for us. Yeah,
it could just get back into its leadership role, because I would say like last year or the year before was always like Monsanto and CF, they're the leaders. Let's see what everything else is doing. And yesterday, finally, CF had a nice igniting bar. And if you look here at the chart, you will see that, you had a nice move, took back all the moving averages, closed above this downtrend that's been controlling the stocks in September. So right now, CF looks pretty good. If you want to see some commitment to it, I would say make sure it could hold above this area. But at this particular point, if you're looking for ags, this one's in the game. Monsanto, which we've mentioned a few times, is best in breed. It has its earnings behind it, which is good actually, so that you don't have to worry about that. But overall, look at this. It's at highs. They tried to sell it down after earnings. It held in there. Overall, I would like to see the 8-day catch up a little bit more before it goes again. But this stock has been a great stock picker vehicle and also a decent trading stock. So Monsanto and CF at this point, I think, are the leaders in this group.
Yeah, and another name that was more of a laggard than CF over the past year or so was Potash, that we used to list on our price point sheet all the time, and it used to be, at the tip of the tongues of people on the trading floor. And for a long time, it sort of got pushed to the side because it was underperforming a lot of the other ag names. And now we're starting to see it creep back up. I know Sperling's been playing pot a little bit, and I know other people on the virtual trading floor have been playing it. Is this something that's back in play that you're going to be looking at very closely this year?
Pot Smiley smoking a little bit, right? It's like, last year we were saying all the time, like, what's wrong with this stock? Why isn't it in play? Sometimes it just happens that way. And then this year, when we talk about where does money go, how does things change in a new year? What kind of composure does it have? And then finally, you're getting some follow through in this name, which is good. A lot of times, every time the Ags were going, we try and buy POT last year, and we get arrested because they wouldn't move and we get hurt. Anyway, you look here, you look here, and you'll see this chart. You'll see that you have a few different levels that it's going to have to get through. First thing first was taking back the moving averages. You saw a nice wide range bar here. You know what? I'll let you take a little bit of a closer look. So as far as a trade, here is the low. Here is where it woke up. You then saw some commitment to this, just this breakout above this little downtrend. And then the last 3 days, or the last 4 days, when the market was consolidating, it was inching up, inching up, inching up. And what did it do? It just took back the 200-day. So let's look at it on a more macro basis here. And you will see that it still has a lot to prove. It still might pause as it comes into this downtrend. So if you were playing on a micro basis, maybe you sell a little bit into this 43 area. But then if it does take out this intermediate downtrend, at some particular point, really the next big resistance doesn't come into about, the 50 area where it broke down from, over a year ago. So at this point, I think, there is some money here, and I think it's worthy of putting on your trading plan to see if it continues.
All right, as we get in the trenches, we're going to shift our focus a little bit to the social stocks, social media, social gaming. We'll start with Facebook, which has found its way onto the morning call agenda more than once recently. And 2 days ago, after a little bit of rest, it ignited again yesterday and was up over 5%. Facebook continues to impress since squeezing shorts on that November 14th IPO lockup expiration. And we talked about it yesterday, that conventional wisdom was telling you that 800 million shares were the lockup was expiring on 800 million shares, which is 30% of the net float. And conventional wisdom said, wow, all that supply is just going to drive Facebook down. And it seems like a lot of shorts positioned against that, and they got squeezed, and the stock hasn't looked back since. What do you see now in Facebook?
Well, you see headlines, and everyone loves to write stories about Facebook because of the debauchery of the IPO. But as market timers, you could be wrong, and then you could be right. And if you're not stubborn, you could take advantage of it. Now, if you look here, I'm going to show you the first chart of Facebook, the first time we focused on it when it didn't work. Okay, here is your huge gap up, and according to our IPO rules, you never get involved. Why would you if it closes on the lows? So here was the first, just say, 2 months of the trading. And if you remember, right here, it did look as if perhaps it tried to put a bottom in. Okay, it had support at 30.50, came up off the lows. We had a really nice trade here. This was your resistance area. We were looking at the thing I was quoting Jim Cramer saying maybe Facebook has bottomed. If we get above this 32 and change, we can continue. Look what happened. Boom. Okay, right there. You you take your stops and you honor them. Honor your stops. Write that down. That 30.50 was your way out. You get out, it wasn't ready. So now fast forward, to this all move down. So if you got stopped out here, who cares? You're allowed to be wrong. You're going to be wrong a lot in this business. Then you come into this new area like you just mentioned. Here was the bottom. This was right after I think Barron's wrote that article that, it's going to go to 15. Good job, Barron's. Anyway, here was when it wound up having that igniting bar, on my way to the airport. And then what really happened is it held higher, and this is when we started to really focus on it, saying, Facebook's changed. You had an igniting bar. You saw some commitment to it. Tier 1 in here, Tier 2 above 24, and PS, it gave you another nice entry as you saw this descending channel. So here was like a micro little cup and handle pattern that failed, and here was a little bit more of a macro, which we have on our 2013 list that came out in, I think, the first day of the year when Facebook was right around here. So
New Year's Eve.
Yeah, New Year's Eve. So boom.
So even earlier.
So anyway, here was another entry. This is when it cleared that 2860 that we were talking about, and then even yesterday with that invitation to that January 15th event, it went again. So at this point, it's coming right back into resistance. I know I tweeted yesterday saying I have the lowest amount of Facebook that I've had on since or during the majority of this move. I always like to sell into strength. So this way, if we do see a pullback, I could buy back. John, I still have a little bit left in my, I have a swing account, I have an active account. It's still acting well, so until I see some kind of topping tail, I'll keep it in my swing, and then I'll buy it back, and I'll just keep maneuvering the positions.
Yeah, it's funny, you talk about it all the time that, Facebook right now you're seeing on social media and in the news everyone's bullish on Facebook now, talking about the great story, Facebook's turning the corner, this and that, after it's made this extension. But conventional wisdom will get you in trouble a lot of times. And when Facebook was down near 19, below half its IPO price, everyone hated it, said it had no future. Google Plus is going to take it over. Some other social network is going to come take it over. It's the next MySpace. And now Facebook can't do anything wrong. And we don't chase excitement. It's made this extension. Like you said, you've been trimming and trailing positions, which you do often. And right now is not a time to chase excitement in Facebook. It's a time to trim those positions and wait for another calculated setup.
Yeah, and just know your time frame. Okay, like I've been holding, I think, an amount since that 23.75, or I think maybe there were a few days I didn't have it. But then you add when the price pattern warrants it, like we saw it through 24, like you saw it through 28.60, like you saw it through yesterday, 29.79. I have all these numbers in my head. And then you sell something to everyone on TV saying you have to buy it. But you don't get away from it. You just see, we saw the same thing happen in the banks, which we'll get into in quick hits. But with that said, LinkedIn, which we used to write about a lot, right? We used to always be like LinkedIn, best in breed, new issue. They didn't sell it off. It's been very quiet. So with that said, it's time to take a look to see how that looks. So if you look at the chart of LinkedIn, you will see that we've had two tight patterns. It's a very sloppy chart. Here was your bottom, broke through the 200-day, reclaimed it, then it went sideways. I remember talking about this 109, and now look at this nice descending little channel here. So overall, I think that if it's going to get any momentum, which it could get if you look closer, it's got to get above this 115 and stay above it, maybe even 116. Okay, I remember in here we were trying and it was very choppy, then finally it went, had a nice move, and it's not trading clean, so traders don't like it, but if it does get above this, maybe it can go. You go to the weekly chart and it still looks really good. Okay, look at this IPO, all right? Most of the biggest winners in the market come from IPOs of the previous 3 to 5 years. So with that said, if you guys remember, this is when we got excited about it, when it broke this downtrend, held it, gave you a really nice move, back to the highs, couldn't get through it. It's been sort of sloppy since, and now you have this nice little flag pattern where if it could start to get above this area, we're very, very close to these historic highs. And, I know they've had a few different earnings reports that have been good and it's been treated well. If LinkedIn has a good earnings report this time, I would not want to be short that one.
Yeah, and it's funny because LinkedIn is one that you hear traders grumbling about it because it's been frustrating from a short-term trading perspective because it's been choppy in that range. But in reality, you look at the chart from a swing trading perspective, it's still in that channel and looks constructive. So we'll see what happens with LinkedIn. Another name in the group that is much more of a laggard name is Groupon, that has almost doubled since bottoming out and is looking a lot more constructive right now. But we always have to be careful with those laggard type names with our expectations. Normally with laggard names, they have a high short float and maybe they get a little bit of a squeeze, but then you have to evaluate the rally. What are you looking for in Groupon now, Scott?
Well, guys on the virtual trade floor saw that I've had Groupon for a while, and I even had Zynga, and I put them on when I thought Facebook was getting really exciting or looking good, because sometimes when the alpha dog goes, people are looking for other things that can go with it, and it didn't really have the moves that I thought it would. If you look at the chart of Groupon, yesterday just out of pure boredom, I think I sold it. It did have a nice move. It gapped up and continued. We did see a little bit of traction right here. But at this point, I'm out of it. There's no need to hold it. But you do see some technicians are pointing to an inverted head and shoulders bottom. Okay, where you have the left shoulder, the head, the right shoulder. So in order for this to kick in, and you have a really big gap here, which is also exciting, it's got to trade above this 545 with authority. Right now, you're not seeing much authority in here. You're just seeing, a little bit of a lackluster trade. So for me, I'll wait till it gets above there with heavy volume. Maybe there's a trade. If you want to hold some, I think it's okay. There's been some decent trades along the way. And if you weren't caught in this mess, and there's been a mess, like look at this. A lot of people, this was a disaster, saying, oh, everyone said this thing was going to Pluto, and meanwhile it went to,
Mercury.
But down here, as a treasure for trash, because this is someone's trash if they held it from 17 all the way down to this level, but it could be someone's treasure if you time it for an additional move. But I would just say measure the action, because laggard trades, when the volume leaves, the what's that, musical chairs, the chair gets pulled back real quickly and it's not worth your time.
What do you think about Zynga? It's a similar type of name that a lot of people around the Facebook IPO were extremely bullish on it, and then the Facebook IPO is disappointing, and like you said, they're sort of trading in sympathy to Facebook. Do you think Zynga can get any sort of momentum, because they've really hitched their wagon to Facebook in a lot of ways?
Well, Zynga, disaster last year. Everyone said when Facebook comes out it should be about $20, or a lot of people said, and it didn't happen, and it gave you a lot of technical sell signals. So let's just fast forward where we are now. lot of, I was thinking maybe it could be a January effect stock. Everyone wanted it off the books. Everyone wanted to take their losses on it. So maybe it would lift in January. So a few days ago, I think I bought somewhere around 240 on this little, wide range bar. Like you look down here, you have a big gap. So it's been doing some nice sideways work, or not nice if you own it from before the gap, but some nice sideways work since almost, late July. So right around here, it looked a little exciting. I think I got in on this day, and then even on a micro little stock like this, you saw a small red dog reversal because it was a 20% move, even though it doesn't look like much. And it just came back in real quick. So for me, I don't need to look at this thing and hold it, so I wound up getting out of it. If this were to start acting any better, I would say it has to really get above and stay above 275, and then for it to get any type of momentum into this gap, it's going to have to close above this 327. So I wouldn't be in much. If you have anything, have a feeler just so you could watch the price action, because if something does happen, it'll go fast and you need to see it. You'll also probably see it on volume filters, but right now you're not seeing much attention in here, and this was a start and it was a false start, so you have to wait for the next one.
I'm sure you'll see on the virtual trading floor if it comes back into play, because Sperling likes to play some laggard type plays like that can move quickly. So we're going to go into some quick hits right now. Bank of America is one we're going to talk about, not because it's been performing well on a macro sense and on a swing sense, but yesterday we saw it violate some upper level support levels. Got a sort of potent down bar as the market weakened a little bit in the afternoon. What do you see from Bank of America right now? Is this a big red flag from a macro sense going forward, or is this just a natural event based on the recent strength?
I think more of a natural event, but you always want to judge it thereafter, and you also always want to be prepared for it. Bank of America, I feel like I've been talking about almost every other day since the summer. Okay, and there's been times to be in a core position, a time to stay with someone, a time to be really light. And I think as it was above 12, I got as light as I could be without being flat, because from 995 through 10 to here, I'll talk you through the chart instead of doing it that way. From this area, which was your tier 1, here's your tier 2. Then it consolidated really nice, let the moving averages catch up. So here's another tier 2 back to tier 1. And finally up here, I started hearing all the upgrades. I'm like, you know what? We just went to 12 and change, which was one of my targets for the first quarter in the first week and a half. So let me sell some. And then once it broke this trend line, or once it broke this upper flag, 1188, I think I got really light. And then as it approached the 21 day, just as a professional trader in front of my computer, I'm like, let me buy some back. I bought some back around 1140, and we'll see how it handles, this support. It hasn't been below the 21 day in a while, and look, when it broke below here, it was very short-lived. So anyway, you did have a trend line that's been intact for, the past, almost 2 months, so it broke below it. So it's always good to take some profits, and if it can't take back more than just a half of this wide range bar in the next few sessions, and then perhaps breaks this area, then maybe you get a little bit more flat and see if it does want to pull back to support number 2. But right now, I would say 11 to 1133 is an area to try, especially if you sold some strength above 12 or you got stopped through 1190. You have the luxury of buying back in here. If you're a swing trader, okay, and you're not a professional trader and you're just sitting in it, I do think that this stock has the capabilities of going a lot higher into the end of the year, but a year is a long time. So if you're going to keep it in the drawer, keep it in the drawer as a tier 1, because yesterday gave you some clues that it's now warranted to be more than a tier 1 as it broke the momentum level.
Yeah, I mean, you had a huge move from that $10 buy price that we were really hawking on the price point sheet and on off the charts. And if you're really expecting that much more on a short-term basis, you're getting a little greedy. And let's look at a couple of the other banks of the charts of the banks real quickly, because some of them held up a little bit better than Bank of America yesterday.
I'll just say yesterday, Goldman, let's go real quick because we're running out of time. Goldman, still flagging, doesn't look like Bank of America, but I'd be a little bit careful because Bank of America led the bank move, so you want to make sure that this continues, so this is okay. Yesterday, JP Morgan actually had a bit of a topping tail, but still, no real drastic down move, just a little bit of a pause here. So see what happens here. If know your time frame, I still think it's okay, but it might want to test this 21 day also. So see if Bank of America's little breakdown will lead to some other weakness in the banks. It might not though, because it ran so much more.
All right, real quickly, Google. What do we think about the chart of Google?
Google's acting much better. I think some guys got long a little bit yesterday, above 740. I think it continues.
All right, gold, still sort of stagnating. Do you see anything compelling, or is it just still stuck in the mud?
Stuck in the mud. I think it's going to have to really get above 164 for any kind of momentum and any kind of change of character on the GLD.
TBT, I know is something we talked about yesterday, something you've been trading. It's the inverse 20-plus year Treasury bond ETF. What do you think about that?
I think that bonds will be for sale or have been for sale, and I think that it just had a really big move, okay, up into some resistance. It tried to take the 200-day back. It couldn't really hold it. I think that as long as it stays above this 65, I think that you're going to see a lot of fast money try and stay with this trade. I know that this type of trade has happened a few times over the course of the past year or two, and it hasn't been sustained. Let's see if it will be sustained this time, and the reason, you'll see it, is if this gap holds and they don't fill it. Same thing with TLT to the downside. You've had a big move to the downside already, so at this particular point from just say 127 all the way down to below 118, you want to see what type of bounce. And if this gap that was a little bit more of a powerful move to the downside doesn't get filled, you will see that this gap should stay in control and lead to more downside quicker. But if it starts to come into this gap and come up, you'll see people that are impatient probably get away from this trade a little bit more.
All right. Well, with that's the morning call for this morning. I want to thank you all for putting up with me this week rather than the beautiful girls that we usually have in here. But that's the morning call. We look forward to seeing you in the virtual trading floor.
Yeah, we're just just like trade management, you have to have a morning call management, and we're doing some changes, and we're making some moves to get the information out as early as possible, and we will have a more, not say stable, because John, you're very stable. We'll have a rotation, and we'll be back on track, and thanks for your patience, and we're trying to just get you as much timely information as possible between the video, the morning call, the writing, the site, and just stay tuned, as 2013 is going to be a very, I would say, a
lot of opportunities this year.
A lot of opportunities this year.
I don't know what kind of year you think it's going to be, but I think that's what you were trying to say.
Yeah, he often changes my words, usually on paper, and makes sure my grammar's okay.
Yeah.
With that said, have a great day trading. We'll see you later.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.